Quite a bit of red on the screen here in this early Friday morning, and I'm kind of sad that it's Friday because I feel like I was just getting warmed up here. I think that there were a lot of opportunities to add some risk assets, to take a bit of some of the defensive plays that have been working well in client portfolios off. So yesterday, CNBC, they chose not to cover gold yesterday, and just 10 seconds before going on, the producer in my ear switched it to Bitcoin because of the fact that Tom Lee came on with a very bullish call with $200,000 Bitcoin by the end of January. Now, Bitcoin is down 24% month to date, 12% on the week, 4.5% on the overnight session, just above that 80,000 mark. I believe that the probability of silver hitting 50, 55, making new all-time highs, $60 by January is a much more likely scenario than something like $200,000 Bitcoin, but we'll see what happens. So this morning, I'll be covering the commodity markets on the Schwab Network at 8:10 a.m. Central Time. So it should be a much better interview than what we saw yesterday here because of the fact that, they switched topics and shortened it up a bit. So, but good morning. It's Friday, November 20th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So my broad-based overview, because I keep getting this question a lot on this decline, is that the holiday party, it isn't canceled, it's just being delayed. So overnight, the precious metals, they are showing some mixed results. They do have gold down about 0.5%. They got silver declining about 3.5%. So that's down at 48.34. Just above the 48 mark was the overnight session, down about $1.95. You got the gold silver ratio sitting at about 83 to 1. So you look at what's going on in these markets. It's, the ETF flows, they're still there. They're selling the gold market, they're selling palladium, they're buying silver, and they added 382,000 ounces. The key level in the gold market here, I still think just below that 4,000 mark, 39.97. That was the Tuesday overnight lows, which held. The dip buyers came into the market. Then 39.96 is your rising 50-day moving average. Don't put a lot of stock in these moving averages here. These things are just good talking points for a lot of the media. And it's simple things for people to look at, and people like simplicity, but there's a lot more dynamics that are going on in these markets than just like a 50 or a 200-day moving average. Now you look at key trend support in that gold market, it's going to be 39.6110, so it's continuing to move up just a bit here, and that's where really things would change from a bullish trend to more of a neutral stance here. So restarting the rate cuts, and this is what I wanted to get into, in 2026, that really lays the groundwork for the next leg higher in risk assets, probably stops the decline in Bitcoin, and acts as a tailwind for many markets. So once we start getting consistent data releases, and I told you how sad I was once the data, because I go through the data every single morning, what's expected, what the probabilities, what the nowcast says, how it'll impact interest rates, the dollar, gold, and then it has a trickle effect going down on all the other commodities. So once you can understand and interpret data really well, then you can get clarity on where the U.S. fiscal situation's going and things like that. So really that would help lift the fog around the Fed's path on interest rates, give investors clarity on official economic data such as jobs and inflation, and shift the market focus back to the U.S. fiscal outlook. Now looking at silver, down $1.96, down 3.9% here. And why is it down so much? And there is a bear case for the silver market. Just kind of hear me out for a second, because it's kind of important. What I do, if you know me, I'm kind of, apolitical. I'm like, I tell you that these commodities, they're not really relationships. They're just tickers on the tape here. So when you look at silver, you want to look at, the global demand. It's expected to decrease about 4% this year. The industrial demand, it's projected to ease about 2% in 2025. It's really been just the challenging economic outlook, the uncertainty over the U.S. tariffs, slowing global growth. And globally, a lot of markets are really slowing. They've got higher inflation, and they're slowing down. That's what we're seeing in Europe, the UK, and that's why you're starting to see some of these foreign currencies crack. And that's why I believe that, you could see a higher dollar in the gold market at the same time. You also have those, non-industrial applications like demand for silver jewelry, silverware, that's forecasted to decline about 4%, 11% because of the higher prices. Then you get the physical investment. People just aren't going out and buying the bullion because there's a lot of ease in buying other asset classes like ETFs and things like that. So physical investments falling about 4%. That's the third consecutive year. It's the lowest since 2018. You get the rising metal prices. They've negatively impacted like industrial activity. So the high prices, they cause significant cost pressures. If you ever try and build a house or something like that, a lot of times you'll look at substitutions. The simplest way to put is that when you get higher meat prices, they substitute to things like pork and chicken and things like that. Now, silver, you could substitute in certain ways where you can start implementing different coppers and aluminums and things like that. Like, because of the high copper costs, what electricians are doing is that when they lay the ground cable, and that's what's being stolen a lot around some of these data centers, around some of these cell phone towers. What the electricians are doing is they're replacing that cable with aluminum, and then they're marking it with aluminum to prevent that kind of theft. Now, you look at the bull case for silver, and what I believe is that many of these declines, these small 1%, 2%, 3% declines, are going to be offset by the AI boom. So it kills me when I talk to a lot of people and they go with the valuations, this AI hype and things like that, yet in their own accounts, they're buying things like silver and copper because those are the picks and shovels that are going to help support this AI boom. And also things like nuclear. So it's this AI investment boom that has driven growth in silver, gold, copper recently across various applications with those data centers, the grid, particularly renewable energy sources like solar panels specifically with the silver market. And you expect grid and power infrastructure to drive 60% of the global demand in copper through the end of the decade. If you look at silver, you see something like this is how we were in a surplus, global surplus, and then we've been in this 5-year deficit. And what's happening is the rate of changes is we're coming back closer to where we have an equal amount of silver to meet all the demand. What you want to see, if you're a real silver bull, you want to see $100 silver, you need that to decline. You need AI to just strip away any kind of reserves there. And then because of that turn up in the market, what you'll have is you'll have people with ETFs, the exchange for physicals and things like that. They'll buy, and then what the ETFs have to do is they have to secure inventory because it's written in their disclosure document. More higher prices go, more shares are issued, more silver's got to be backing somewhat this ETF. Now it's not one for one, but it's percentages, and that's where you get this drive up here. So the ongoing deficit, it really coincides with a significant increase in silver investment. So, the exchange traded funds are on track for their second largest annual increase in 2025, and that's where you get this super large, deep supply shortfall. So, looking ahead, you look at the macroeconomic factors, geopolitical tensions, broad-based rally in precious metals. As long as those take place over the next 12 months, you're going to see that supply and demand fundamental will support silver and continue to support silver prices higher, because if you don't have that AI demand or some new demand and all those different segments decline, well, then that's how you get $40 and $30 silver. I know you don't want to hear it, but that's just the way it is. That's just me telling you like the reality of what I think on this. Now, shifting gears to the equity markets, the futures, they are lower. They're coming off their lowest levels here, following that historic yesterday reversal, that sour mood. And what they're really honing in on is the Fed. It's less about the AI bubble. It's more about the Fed. So that magnitude of the pullback, we're about down about 5% since the October peak. And then because of the lack of data, the Federal Reserve, you look at Fed's bar, who had supported interest rate cuts, now all of a sudden has this hawkish narrative and is concerned about the discomfort over inflation. And then you get Morgan Stanley, they say that they're no longer expecting that December interest rate cut because we did get a bounce back in the September payroll, so it lowers that risk of the high unemployment rate. Today we should get, I don't know if we'll get, it's November PMI scheduled. You get University of Michigan sentiment. You do have Fed's bar, Williams, Collins, Mirren, Jefferson, Logan, all scheduled to speak, so a lot more Fed speakers. You go over to that CME's Fed Watch tool, you got about a 43% chance probability Fed will cut interest rates 25 basis points. It edged up from yesterday, and it's because you get the turmoil in the markets. People are concerned, but the Fed usually doesn't, unless it gets really chaotic, come in there and do a rescue type of cut. Now you go to January, excuse me, you go to January, it's a 50% chance of a 25 basis point interest rate cut. Sorry about that. You go to a 50% basis point cut, it's going to be, or a 50 basis point cut, it's 23% chance. So although the timing of this cut around December is uncertain, I think that the path is clear that interest rates should be heading lower to some normalized space, and where that terminal rate's at is still yet to be determined. Now you look at the dollar index that's up through 100. You got C across of red across the screen in the FX markets. The 10-year treasury yields, big sell-off down to 4.06. So this is where clients who have exposure to 10-year futures and call spreads, it's really been helping them out. And then you go to the volatility index shooting up here up to 26. It's easing a bit overnight here. You know, the S&P 500, when you look at the options flow, it's the negative gamma. So that implies that the higher volatility should be expected. So the market makers, what they have to do is, as the market makes dramatic moves, they have to hedge their books. So if they are short puts, they've got to short futures. If they're selling call options, they've got to buy futures. So what happens is you get these faster corrections going up and down, and that's where this VIX stays higher up. Now you look at Bitcoin, down another 4.5% here, 82,400 overnight. You go to Europe and Asia, well, European stocks fell. Asian equities, they posted their steepest decline since April. The MSCI fallen about 1.9%, and the losses are about 4% this week. So I'll be on the Schwab Network. Sorry to be, another longer video here, but kind of wanted to get in that silver market because, going over some of these numbers and things like that, it really helps me have clarity of like what the next driver is of this thing. And then what you could do is you can monitor some of these things. So if you see a sharp reversal in all of a sudden the NASDAQ today, some of these AI stocks, you get some of the investment coming in, it might be, the tail wagging the dog where silver wakes up throughout the session, because down about $2 here in the overnight session, it might want to play some catch up here, or perhaps this is just a delayed reaction from yesterday's sell-off. So we'll see how it plays out. I think the bargain hunters will start to come in here. But you guys got any questions, you want to open up an account, shoot an email, info@bluelinefutures.com. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.